Every week, I talk about what's going on in the market. Why? Because market direction is the most important thing when investing. Stay tuned to learn more. Good afternoon, everybody. Welcome to Trending Thursday here live on YouTube. Sorry for the delay. Something happened, but that's why I have Joey in the background to help a man out when something like this happens. So I appreciate that. If you can hear me, by all means, in the chat, please respond with VV Nation to let me know that everyone can hear me loud and clear. All right, we're going to get started. Can't nothing slow me down. Ain't nothing going to break my stride. Ain't nothing going to slow me down. That's right, because that's what it's all about here on Trending Thursday here live on YouTube. My name is Glenn Tompkins. I'm a senior instructor here at VectorVest. I've been with VectorVest now for about 16 years, helping people just like yourselves utilize the VectorVest software to make money in the market. Today, I have an extremely special guest who is on our YouTube content hosting fantastic Female Fridays. Her name is Susan Hayes Colton. She's going to be my guest today. Joey's going to bring her up on the screen. It's my pleasure to have her here. I played a small role, just a small role in helping her to understand the VectorVest software when she first came on board. So it is definitely my pleasure to introduce her. And now what I'd like for her to do is talk a little bit about herself and the content that she shows here on our YouTube channel. Susan, it's all yours right now.
Hello, VV Nation, and how are you all doing? So, yes, it's Susan here, back to you. Thanks so much, Glenn, for the opportunity to be here as part of the show. So last time I was here with you, I was telling you about fantastic Female Fridays that was going to be launching. So we are now right into the middle of that show, and it's taking place every 2 weeks at Friday at 12 noon Eastern Time. So what we do is that we focus on investing in a way that suits women in the very best way. So anybody who was on this show the last time I was here, you'll know that women tend to trade less. They tend to stick to a strategy more, and they also tend to actually get better returns. On the other hand, men tend to be in the market more. They will rebound faster from trauma. And also they tend to be more, they tend to focus on more short term, whereas women take a longer term approach. So what I do is that I take the natural edge that women have and that I focus that right into how they can increase their ability to generate return, manage their risk, and of course, understand themselves better as well. Now, part of that also involves a special type of element to do with personal development. And personally, Glenn, I have been working on being the best version of me since I joined VectorVest. I didn't realize we were actually so close in VectorVest age. So I am with the company now for almost, next month, 9 years. And over that period of time, I've worked a lot on ways in which that I could improve my abilities within my career, within my investing, and within myself. So what I've been doing over the past couple of weeks is sharing with our fantastic Female Friday audience just how I've done that. So for example, I've shown them a methodology to improve their motivation. I have also shown ways in which that you can take on limiting beliefs and overcome them. And now tomorrow, what we're going to be talking about are setting effective goals, because Glenn, one of my biggest bugbears is when people set a goal and then unfortunately they'll never know if they actually reach it. So if we could take an example of that, I might say that, you know what I'm hoping to do this year? I'm hoping to be able to read the market better. The thing is, Glenn, how am I going to know if I'm going to be able to do that? Whereas on the other hand, if they said, okay, I'm going to try to get to Trending Thursdays twice a month. And what I'm going to do is I'm going to implement at least 2 of the stocks or 2 of the strategies that Glenn talks about. And if I don't implement them, then I'm going to research them and get to grips with understanding of how to do that. Then at least, you know, it's more measurable. So what tomorrow's show is going to be about is that we're going to focus on exactly that, setting effective financial goals, and how then that can weave into all the various different areas of your life to be effective, and also then how we can use VectorVest to optimize them. But of course, today, the reason I'm here with you is I've got a lot of opinions on an awful lot of what's going on right around the world right now. Really excited to be part of this show today and to share some perspectives with you from somebody who lives in Europe. So I'm based in Dublin in Ireland, and I love the States, love when I get to be over with you all in North Carolina and Ohio. But I'm going to share some perspectives on what's happening in the European markets, the European view of what's happening in the US markets, and also because my favorite way to transact within the market is actually through options. So I'm also going to take a look at some options trades that I've personally taken over the last while, and I'm going to bring you up to date on those, give you some other perspectives on what you're going to talk about, and I'm ready to delve right in.
All right, with that, I'm going to really enjoy it. I think we're going to enjoy having the perspective of what's going on, even outside of the United States, in the European market. I think you bringing that to this presentation is going to be priceless. So in case you did not know, we do track markets other than the United States and Canada. We track the UK, we track Europe, Singapore, Australia. I'm probably missing something, but we are well-rounded. I think we cover just about all the continents, so that's a good, do we not? I think so. And if we don't, we will. All right, so with that, we always start off the week or the session with what's going on in the market. So we do a bit of a market overview. And we're going to start off right there today. Which one do I want, Joey?
Start here? You want
Yeah.
to start with the story?
No. Yeah, I just want to start here with the market overview. There we go. So we can see the both of us. And we always start off with what's going on in the market. So today, looking at our homepage in the VectorVest software, all of the major indices are down, which is kind of interesting, especially knowing that two big stocks hit earnings yesterday. When we looked at Microsoft, we looked at Tesla, both hitting earnings yesterday. You would think that would be a bump up in the market. One other thing happened, though. Unemployment number was a little higher than what was anticipated, and that's the first time since March that has happened. I think that with the reopening going on, it affected a lot of the cases of COVID-19. In case you've been living under a rock, we are in a pandemic. And, that I think is affecting the market adversely as well. But all of the major indices are down, with the NASDAQ leading the charge to the downside, down almost 3%. But as a VectorVest subscriber, we should not have been blindsided by a day like today, because as I move over to our color guard, the market timing indicator, or MTI, is still searching for a top right now. The market, even with a lot of the bullish days coming in, have been telling us to be careful, to be cautiously bullish. And not being a VectorVest subscriber, you won't get that kind of information. So for many of you who are here, one, thank you for being here. But if you're not a part of the VV Nation or have a subscription to the VectorVest software, Joey is going to put a link in the chat for you guys to take advantage of the VectorVest software for 30 days for an outstanding price of 99 cents. So for many of you who want the insight as to what's really going on in the market, click the link, take a trial, all right? So as I look at our color guard, which is our traffic light into the market, a lot of yellow. When you get to a yellow light, what do? Joey speeds up, right? Because Joey doesn't know. Oh, by the way, say hi, Joey.
Hi, Joey.
All right, Joey's my producer. Joey said he ain't got no time for that. He doesn't slow down, but as an investor, you should be slowing down in your trades. What does that mean? That means if you're going to put money in the market, do it sparingly. Still take advantage of the up days. That's okay. If you're still long in the market, tighten stops. All right? Don't let a day like today catch you off guard where you say, holy smokes, what just happened? Don't worry about that. Take what the market gives you and have a plan in place. Your plan lets you know when to buy, what to buy, and when to sell. So as we look at all of the yellow in the color guard, the MTI looking at a level of a market top, keeping those things in mind, let's go find out what's making the market do this as we go along. Now, Susan, do you want to add a little bit more about what's going on in the EU market as of right now?
Yes, I will indeed. Can I just first of all pick up on those figures that you mentioned about the unemployment, because I think that that's a real point that needs to come up here, and that is that when we take a look at the amount of payroll that the US lost, I mean, there was a record loss of 20.5 million payrolls in April, and the US actually added a combined number of jobs of 7.3 million in May and in June. And then there was also, that was followed up then by a surge in retail sales that was up by 7.5%. And that was followed by an 18.2% increase in May. So really there was a lot of momentum here. Obviously there was a significant amount of conversation around a potential vaccine. The world looked like it was opening up again. So you can see why there was quite a significant push in the US market. Now, this time round, though, we've had the first decline when it comes to jobless claims, an increase when it comes to jobless claims. And that is that the jobless claims rose to 1.42 million seasonally adjusted in comparison to 1.31. Now, that's a very significant figure because the trend of all of that was happening from the top, from March right down. Now, from the US or from the European perspective, I just want to mention a couple of things, Glenn. First thing is we had a really big story that happened this week, which is that our European Union leaders signed off with a 750 billion euro stimulus for the European Union. And then that means that in addition to the amount of money that the countries individually are borrowing, like we're borrowing in Ireland 30%, or 30 billion, which is a huge amount of money this year to pour in to the economy as a stimulus. And of course, everything that goes into the economy can then also be recycled back into the stock market. So what I thought I would do actually is thought a good way in which to take the temperature both sides. Let's take a look at both sides of the Atlantic here, Glenn. Let's compare me and you in our respective markets.
Okay.
I write my views for VectorVest Europe every single week, and here's a sneak peek for anybody who has got the European database. Here's what I wrote about this week. I compared the buy-sell ratio, relative timing, and the percentage where the VectorVest composite is currently relative to its peak. And let me tell you where we're at. In the US, as of the last time I checked on real-time data, the buy-sell ratio is at 2.77. In Europe, it's at 2.73. Yesterday, Glenn, it was over 3. So the thing is that now we can actually see that steadying off where, particularly from a buy-sell ratio point of view, we're pretty much the same. Our relative timing in both of our respective markets is practically the same. You're at 1.09, we're at 1.1. And here's the difference between us though, is that the US market, and when I mean the market, I mean the VectorVest composite. When we look at VVC, the US currently is at 93% of its peak, whereas in Europe, we're at 86% of our peak. So if we're to compare solely from where we came down from, Europe has got some way to go. And just to finish this off before we go back to you, the UK, I just wanted to add in a piece of analysis from there too. The buy-sell ratio there is at 2.45, but lower than both of us, Glenn. The RT is exactly the same as Europe at 1.11, but its percentage from its peak is at 91%. So it's actually closer to the US. It has got back 91% of where it was at its top. So when we look at the market from a global point of view, I just think that it's interesting to look at whether the buyers or the sellers are winning the battle of today and why, and also how much in comparison to back at the March peak when we look at payroll in the US or whether we look at the markets in general.
So take all of that into consideration. The uninformed investor is the one that's just looking at, hey, the market's going up without understanding what's going on behind the market. The big jump in the payroll or lack or increase in people looking for a job, that's big and it weighs heavy on the market. Knowing where we are in respect to our most recent high, and getting close to that level again, what do you think is going to happen? We're not in uncharted waters right now. We have a temperature gauge to look at, and the closer we get to that, what do you think is going to happen? Well, if history is going to repeat itself, we're going to pull back again. The issue is not if we're going to pull back, it's when we're going to pull back. And looking at the VectorVest software, no matter what country you're in, we're giving you the telltale signs of this is a time to be careful. That MTI ratio or that MTI indicator is a very important indicator to help the people who are part of the VectorVest family to understand this is a time to be cautious in your investing. Looking at the news that's going along, all of that news is going to affect or is going to be a part of what makes the market move or don't move, and we're going to start getting into those stories. Thank you for that, Susan.
What I'm just going to say on that is I would be the same as you in thinking that, we need a new push, Glenn. We need some reason to drive forward. You mentioned Microsoft, you mentioned Tesla. And the thing is that we're mentioning single companies here that have met or beaten their expectations. And I can certainly give you some examples from Europe again. But the thing is that what's driving growth? In essence, what are we talking about? Is it going to be earnings? Well, I don't really think en masse we're going to see a huge amount of earnings. We mentioned the jobless figures. Jobless figures ultimately mean that people don't have money to spend, which means they can't contribute to the profits of companies. And we know what happens from there. Okay, so then we can also talk about, well, what about borrowing then? Yeah, okay, for sure, companies can borrow. And then what are they going to do with that money? Because we know over the past couple of years, there's been a huge amount of corporate borrowing and share buybacks. That's driven, you could say, the latter end of the bull market. Okay, so maybe if we take that out of the equation, maybe it can still happen, but to what effect? The key thing here, though, Glenn, is who's buying. And the ECB, that's the European Central Bank, the Fed, they've certainly opened up their pockets and poured them right into the markets. We know that there may not be any end to that. But we do have to make sure at the end of the day that we are seeing that the stock market isn't a poker table. It's not a global casino where money just circulates around. At the end of the day, the stock market is buying pieces of companies that have to grow in earnings over time. And I don't really see what can really push on earnings apart from certain sectors in the economy. Again, we can talk about that. Or unless there is complete disruption in certain areas, particularly technology and healthcare might be driving that. If there's a vaccine, of course, and that comes early, again, we can maybe see some restoration when it comes from that. And that's why, Glenn, that's why I'm selling out of the money puts on a range of stocks at the moment, as opposed to simply buying stocks in the hope that they're going to rise, because we need another push. And at the moment, I'm not seeing it. That's why I would be pretty similar minded, slightly taking different actions, but pretty similar minded to where you're coming from.
All right. Well, that leads me into my first story as I open that up. Because what moves markets? Let's go to my first story. What moves markets? You scroll down. Well, earnings, interest, and inflation. Everything that Susan just talked about, still earnings is the big portion of that. Earnings, interest, and inflation. And what is the Fed? The Fed's playing a role. As just like Susan said, the Fed is spending money. The Fed is allowing themselves to open up all of the spigots to allow them to help to buoy the economy. So here's the story. Fed deliberates how and when to roll out more economic support. This is the Fed trying to keep the market going. I've used my Forrest Gump analogy on the market for quite some time now. When Forrest Gump was running, and he was running, and all the people were running behind him because he was being spurred on the run. Right now, that's what the Fed's doing. The Fed is the guide behind the market to say, come on, market, run. And then at the end, what did Forrest Gump say? He says, I think I'll go home now. And that's what at some point in time, the market's going to go, I think I'll go home now. And it's going to start running the other direction. So in this story, the Fed deliberates how and when to roll out more economic support. And just the headline in and of itself is telling that the Fed is trying, between the Fed and the government, Congress is still thinking about putting out another stimulus. I saw another story about that as well. And I'm going to wrap that up into my next story, which is when you look at unemployment, as $600 a week jobless aid nears end, Congress faces a quandary. So right now, I saw a story that said the Congress was saying, all right, we got another another stimulus out there. But I don't know all of the exact details behind it. I saw some stories that said the only people that will get more money are the people who are making $40,000 or less. Or the one that we just had was if you made $70,000 or $75,000 or less. So depending on what's going on, how they structured the next stimulus, we'll see how that ends. But right now, Congress is in cahoots trying to get that done. But this $600 a week jobless aid, a lot of people weren't willing to go back to work even when we started reopening because they were saying, I'm making more in unemployment than I was in my real job, which actually causes a problem to a certain degree. But We were trying to make sure that people were able to pay their bills, pay their rent, buy food. At this point in time, a lot of, if you rent, I don't think you can get kicked out of your house right now if you don't pay rent. I think people who own houses are being able to not pay mortgages, and it adds it on to the end of your existing loan. So it's a lot of things going on, as Susan just said, to try to keep the economy afloat. We still have the best dollar compared to everybody else around the globe, which is making us stronger. And we're the ones, even though getting to recessionary points, we are the least recessionary, for the lack of a better word. But as you've been watching the weekly presentations, we are in a bear market scenario right now. So a lot of things are going on, but the Fed is behind this. This is, in my opinion, still, for us, a Fed-induced market. This is really a Fed-induced market, but earnings is going to play a role. And this is the quarter that earnings is really going to come to fruition and tell the real story. Because the coronavirus hit earlier this year, this is now the second quarter after that happened. We're going to now see the ugly picture of earnings, and it's going to come. And when earnings keep on going down, we're going to stay in a bear market. Thus, the onslaught of a pullback in the market is there. It's not if it happens, it's when it happens. All right, so those are my two stories specifically dealing with what's going on in the market. And what I'm going to do, I take what Susan said, and she actually was able to segue into the stories that I'm talking about right now. So her insight is right on point, and this information is there. Go ahead, Susan.
A couple of points I just want to make on that, Glenn, is that I just noticed there in the comments that a couple of people were saying, well, one person mentioned that it's the same in Canada. So I've been looking into this, and if the $600 a week continues right up until January of next year, around about 5 out of 6 people in receipt will have been receiving, in its current form, will have been receiving more than previously when they were employed. Now, there's two ways of looking at that. One way of looking at that is that people on lower incomes, they have got what we call a higher marginal propensity to consume, right? So that means that for every extra $100 that they get, they're likely to spend more of that, which ultimately is what local communities need. The hairdresser needs it, the nail salon needs it, the restaurant needs it, assuming they're open, of course. So that's one way of looking at it. But on the other hand, as you say, it does, and as a number of people have pointed out, it does act as a disincentive to go back to work. So Ireland has faced this issue as well. And that is that, so students who were working a very small number of hours previous to the pandemic actually were able to get what we called the pandemic unemployment payment, which was €350. Just today, Glenn, I mean an hour ago, about that it's been announced that is now going to be, it is going to be extended until April of next year, but it's going to be broken into 3 phases, and it's going to be dependent on the earnings that they had before, and also then people also have to re-sign up for it, and ultimately, of course, there's also a different scheme then to encourage people to come back to work. So can it continue? I mean, ultimately, of course, it can. Fed can do whatever it wants. It can access the funds. So I think in terms of what's happened so far, whether it's right or whether it's wrong, it doesn't really matter at the moment. The country is where the country is, yours, mine, etc. So actually that money currently sitting in bank accounts can be used to stimulate the economy in the next period of time through what we call the marginal propensity to consume. And then similarly, it's also going to have to be considered how to make sure that people get what they need to do, like you mentioned, pay the bills, etc., but at the same time be motivated to go back to work. And that's going to be the challenge. Now, there's real disparity in Capitol Hill at the moment, how much it's going to cost. You know, $1 billion has been signed off on. Some people there of various persuasions say that it could take up to $4 trillion. That's an awful lot of money. So it's going to be, and of course, the other thing is that we're talking today, the 23rd of July. We're talking live here, Glenn. We don't know where this is going to be in a month's time. If we were speaking a month ago, our views might have been different on how long this is going to last and so on like that. So it is just important to take into consideration that the marginal propensity to consume can have a kind of a longer played out impact on the economy, which thus can feed into the cyclical stocks, the discretionary spends, also the stocks that are focusing on consumer staples that can really, really help those out. And then on the other hand, the government is going to have to consider, how do you balance taking care of people and encouraging them to go back to work? And of course, Glenn, making sure that they have jobs to go to as well. All of that is going to play into.
And that's the magic question. How do you have a balancing act for all three things? You know, getting people to spend money, getting people to go back to work, and giving them jobs. I don't think that we're going to have a lack of jobs. I think that the jobs are there. But with the advent of the pandemic, the jobs are not there right now. But I don't think that we've lost. Let me back up. Because of the pandemic, some companies go out of business. Some companies go out of business, jobs get lost. Totally understand that. But that's part of the focus of what the Fed is trying to do. The president's trying to put out something in the stimulus to make sure that the employers are taken care of as well, to keep them from going under. So it is a balancing act, but it's a balancing act that includes a lot of money, of which we're just printing. And I'll see, I don't always like to put my own opinion into this, but at some point in time, the printing press is going to not be nearly as fruitful as it was before, and we're just putting a lot of money. We're at a lot of our gross domestic product right now. The GDP, what we're putting in, we're so high, getting close into that gross domestic product. Gosh darn it, trying to get it out of my mouth. But there's a lot of money out there. There's a lot of money. At some point in time, you say to yourself, we got to pay this all back somehow. I don't think anybody's looking at that. They're looking at making sure that people are taken care of so that they can spur on the economy. As long as these people have money, they can put it back in the economy. If you don't have the stimulus, people don't have the money to spend. They don't have the money to spend. The economy can't grow. If the economy can't grow, what more can the Fed do? What more can we, It is a balancing act. All of this is a balancing act, and it is a magic question. How do you make this all happen? But, what's the analogy? How do you handle a problem? Or how do you eat an elephant? One bite at a time. And I think we're in that mode right now of, beyond trying to look way ahead, we're trying to take it one bite at a time.